Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys knock out that like button and also subscribe to the channel. So real quick, I have a new Patreon page where I'm creating a brand new portfolio starting in November of 2020, and this is going to be for stocks, stock dividends, and options. Also, stock only to be seen, stock market educational videos that you can only find over on Patreon. So make sure you check them out, patreon.com/daytradingfearless. But as always, let's jump right into it. So with this video is what are my top 4, dividend stocks going into the next couple years, and these are stocks that I actually like to trade dividend stocks while I wait for both appreciation of the stock, but also to get paid. Kind of think of it as a source of income, right? Streams of cash flow. People talk about passive income. Well, here's a passive income, right? If you own a stock and you're collecting a dividend every single month, that is we'll say a passive source of income. So let's jump right into it. The very first one that I really like is Coke. What I have is a 10-year monthly chart, right? So we're going back 10 years of where the stock was and where it's gone over time, right? CocaCola pays one of the I'm not going to say best dividend, but they constantly have done a dividend for like 50 some odd years, right? So it's very slow. It's very steady. You could see you're not going to make a ton of money on it, but if you could collect a couple percent while you wait and you also get appreciation, that is something that could turn out to be a very, very nice trade. So the way I look at it here is we're at 48 bucks right now. We were as high as 60, as low as 36, With dividend stocks, I like to slowly scale in. If it goes lower, I buy more. If it goes higher, I just sit and collect the dividend. It's a win-win, right? Because if I buy lower, I'm able to dollar cost average down, right? And pick up more shares with a better price, with a better dividend, a return on my money, and so on. So with this Coca-Cola, we could see it pays a 3.37% dividend. It pays 41 cents quarterly. So for every share you own, you're going to collect 41 cents, right? Times that by 4, you're talking about $1.64, on a $48 stock, right? So let's say price goes up, goes down over the next 12 months, and we'll say we own 100 shares right here, right? And the stock doesn't move, but we've made $164 on 100 shares just in the dividend. Now, let's say we buy at $49 or 48 even, keep it simple, right? And it goes to 50 within 1 year. We're going to now make $200 on appreciation of the stock and $1.64. So that's kind of how dividends work, and it's just something where you get cash flow every single 3 months in this stock, and you can either reinvest those dividends, right, and buy more shares, or take the cash out and use it for living expenses or whatever you want. So where it really adds up, and if we kind of look real quick, let's pull up a calculator. Let's say stocks at $48, and let's say we buy we'll say 1,500 shares. That's $72. $72,000 that we have working for us. Now if we sit there and we go 1,500 shares times $1.64 a year, that's $2,460 per year that we're going to make. If we divide that by 12, 12 months, we're making $200 of passive income every single month on a $72,000 or on a $72,000 investment, right? So it's something where, and that's if the stock didn't go anywhere. But now let's say the stock rallies, we own 1,500 shares, right? And let's say it rallies $2 throughout the entire year from January 1st to January 1st of the following year, right? Well, if we can make $2 plus the $1.64 per share, that is 3.64. Hold on. 1,500 times 3.64 per share. Now, that's $5,400, right? Divided by 12 months. That's $455 per month. Hey, think about it this way. Why take $70,000, okay, and go buy a car, a BMW, when you can actually go lease or rent that car, right? Or purchase it, get a monthly payment, whatever, right? Instead of paying cash for it, just get a loan. That's the word that I was looking for. You go get a loan on this car for, we'll say $70,000. Your payments, and let's say you put 20 grand down, whatever. You could use $455 of that cash flow you collect every month to go help pay for your car. So probably not the best analogy, so I'm sorry, but let's move on to the very next stock that I really like. So is AT&T. Okay, just the letter T. AT&T is kind of at the low end of the range. They do pay actually a pretty healthy dividend, high dividend at $27.34. They pay a 7.61% dividend, okay, 52 cents every quarter. Here's one of the problems, is we're at the low end of the range. Now, question is this a buying opportunity, or are you going to be in pain with this trade as it keeps going lower and you lose money on the principal side? But remember, you're still collecting 52 cents per share you own. So the way I like this is, hey, let me start to nibble. The last time we were down here, okay, 10 years, well, we were here back in 19, we were back here in 20, and now we're back here again late 2020, right? But before that, it was back in 2011 and 12. But look at that. What if you bought at $28? This thing ran all the way up to 43. That's almost 100%. Plus, you're collecting a 7 or 8% dividend while you wait on your money. Okay, so these are really good long-term, buy good quality companies. Yes, AT&T does have some problems, but it's not like they're going bankrupt. They're the second largest, first or second largest cell phone company out there. Really, really good company, I believe, for longer term. There might be pain, but that's why you go in small and you add to these shares. My next dividend, number 3, is Verizon. Look at Verizon over the last 10 years, right? We were down around 32, marched all the way up to 62. Okay, we're at 57. Yes, we are high. Again, low, just start to scale in. It's a long-term type of trade that we're looking, but if you look, they pay a 4.35% dividend. Yields are at 0%. We need to get a return on our money somewhere, and hopefully get some passive income to help pay for that car payment that you make every month. Don't just go out and buy the car outright, right? Try and get a 0% interest rate for 4 or 5 or 6 years, right? A lot of car companies are doing it with 0%, and maybe your payment's $400 or $500 a month. Okay, well, guess what? A couple $100 every month will help to pay for that car payment. So, just different ways to think about it. And then finally is DAB. Okay, or sorry, not DAB, GAB, GAB. Okay, and this is a Gabrielle Equity Trust Inc. Right? This is one of Warren Buffett's students, right? Disciple students. And what this does is it looks for good quality companies that it buys, and with the profits, they actually help to pay back in the dividend. You could see where it's kind of like you're at 450, goes up to 8, pulls back to 450, goes up to 6, right? Goes back to 5, 6. Yes, this is every chart we're going to see it because of what happened in March of 2020, but nice rebound. But imagine, what if you bought some here, you bought some here, you bought more here, you bought some more here, here, and this whole time you're collecting about a 10 or 11% dividend. So just certain things to look at. I really like this company. I like what they're doing. Again, longer term, you could see it's not one of those mutual funds where it just, yeah, they pay a high dividend, but it's always going lower, eventually to zero. This does have its swings, and maybe here's the key to it, right? Maybe you buy here, if it rallies to 7, okay, or 6.50, maybe you take your profits and you walk away, right? Don't worry about dividend, wait for it to pull back again. So those are my top 4 dividends going into 2021. I hope this video was helpful. And remember, make sure to check out my Patreon page. This is the portfolio where I'm starting to buy and add stuff like this. So until next time, have a good day, and we'll talk to you soon.